Imagine if every adult had a secret score, a number you don't fully understand. But it decides everything. This score isn't based on how much money you earn, how hard you work, or how responsible you are. It's based on how well you've played the debt game. Yeah, that's a credit score. Your credit score is like a report card for borrowing money, and it quietly controls huge parts of your life, even when you're not paying attention. It can quietly control where you live, what job you get, how much interest you pay, and whether you get approved for anything at all. In this video, we're breaking down what a credit score is, how credit scores work, why they exist, and how they control almost every part of your adult life. Section 1. What is a credit score? A credit score is just a number, usually between 300 and 850, but don't let that simplicity fool you. This number quietly decides how much of adult life you're allowed to access. It tells banks, landlords, and even employers how trustworthy you are with money. Think of it like a school grade for your financial life, except you didn't know you were being graded, you never agreed to take the test, and you don't get to see the full rulebook. If your score is low, you could be denied a car loan, charged more for insurance, blocked from renting an apartment, or even rejected from a job. Yes, a job. This number shows up in places that have nothing to do with borrowing money. It's basically your adult passport, except instead of tracking the places you've been, it tracks how much debt you've had and how well you've danced around it. Now here's the twist. You could be the most responsible person on earth. You pay your rent on time, cover your phone bill every month, and never borrow money you don't have. But because the system only counts certain types of payments, like loans and credit cards, all that responsibility might mean absolutely nothing. Meanwhile, someone who's juggling 5 credit cards and barely making the minimum payment each month might have a better score than you, just because they're playing the right game. And that's why it feels so messed up. You're being judged by a number you didn't know existed, for actions you didn't think mattered, in a system that wasn't built to reward actual responsibility. One late payment? Boom. Your score falls faster than your confidence during a middle school talent show. Section 2. How credit score works. So, how's this magic number calculated? There are 3 major credit reporting agencies, and each one has its own version of your financial story, like 3 gossipy neighbors who can't get their facts straight. Then companies like FICO take all this data and feed it into a secret algorithm that spits out a number between 300 and 850. It all starts with your credit report, basically a digital biography of your financial behavior. Your score is the grade, the report is the test, and the test includes 35% payment history. Did you pay on time? 30% how much you owe. 15% length of your credit history. 10% new credit applications. 10% types of credit cards, loans, etc. But here's what's missing: your income, your savings, your bills, and even how many jobs you're juggling to stay afloat. You could donate to charity every weekend and raise your siblings while working 2 jobs, but if you've never borrowed money, you're invisible. It's not a score of how good you are with money, it's a score of how good you are with debt. Section 3. The credit trap. 42% of Americans say their credit score has blocked them from accessing financial products like loans or credit cards. And when that score is low, everything gets more expensive: higher interest rates, bigger deposits, and steeper insurance costs. It's like being fined for being broke. And here's the catch. Once you're in the hole, the system keeps you there. You're scared of hurting your score, so you make minimum payments, racking up interest for years, just to keep the number looking decent. It's like paying the school bully so he won't beat you up, while you slowly starve from giving him your lunch money every day. Section 4. The historical hidden scam. Want to know the really messed up part? For most of American history, credit was based on whether people in your community thought you were trustworthy, local relationships, personal character, that kind of thing. But this system broke down after the Civil War when people started doing business with strangers in faraway places. So in the 1870s, handwritten credit reports started appearing. These early reports were actually pretty straightforward. They'd say things like pays everything in 10 and 30 days, never owes much. Fast forward to the 1950s, and credit investigators were literally documenting everything from your drinking habits to your dating life. They'd write reports saying things like, borrower frequents jazz clubs and associates with questionable characters, or wife appears to make household financial decisions. These weren't just nosy neighbors, These were official reports that determined whether you could buy a house or start a business. Women couldn't open bank accounts without their husband's signatures. Entire neighborhoods were marked with red lines on maps, literally called redlining, where banks refused to give mortgages regardless of the applicant's income or character. If you lived on the wrong side of those red lines, you were automatically disqualified from home ownership. The Equal Credit Opportunity Act in the 1970s was supposed to fix this by banning discrimination based on race, gender, and sexuality. Problem solved, right? Wrong. Section 5. How inequality gets baked into the score. Let's talk numbers. A survey of 5,000 U.S. adults found that more than half of Black Americans had low or no credit scores. Only 18% of Asian Americans said the same. Coincidence? Hardly, because credit scores are based on past financial behavior, and if the past includes systemic racism, wealth gaps, and lack of access, guess what gets baked into the algorithm? Here's a brutal example. Your parents, drowning in bills, put a utility account in your name when you were 12. They missed payments. Now you're 18 and already have bad credit before you've ever earned $1. Or you're a new immigrant. You show up, hardworking, financially responsible, but your international credit history? Wiped. Blank slate. And in the credit world, a blank slate is just another red flag. Section 6. The algorithm doesn't care. Here's the sneaky part that nobody talks about. Just because you can't officially discriminate doesn't mean the discrimination disappears. It just puts on a business suit. People who work in industries that experience frequent layoffs, like hospitality or retail, end up with employment gaps that look unstable on credit reports. If you live in a neighborhood where the grocery store closed down and the nearest bank is 20 miles away, you're more likely to use check cashing services that don't report to credit agencies. Here's a wild example. Imagine two college roommates, Sarah and Jennifer. Sarah's parents helped her get a student credit card freshman year and taught her to use it responsibly. Jennifer's immigrant parents were terrified of debt and taught her to pay cash for everything. 4 years later, Sarah has a 740 credit score, while Jennifer, who's never missed a payment on anything because she's never owed money, has no credit score at all. Guess who gets the better apartment and car loan rates after graduation? Today, millions of people around the world find themselves in credit score limbo. A nurse working double shifts to pay off medical school debt might have a lower score than someone making minimum payments on 5 maxed out credit cards. The algorithm doesn't care that one person is building a career to help people while the other is juggling financial chaos. The algorithm doesn't see race, but it absolutely sees the consequences of racism. Section 7. The system is rigged. Here's where it gets really messed up. The rich don't care about credit scores. They don't need them. They use credit as a tool, not a crutch. They'll get a mortgage, not because they can't afford the house, but because the interest rate is lower than what they earn by investing their cash. If they miss a payment, so what? They've got lawyers and accountants to clean it up. Meanwhile, everyday people are terrified to use more than 30% of a $1,000 limit, because a 50-point drop could mean no apartment, no job, no car. It's like the rich built a game, decided the rules, then walked away and told everyone else, hey, keep playing or else you're gone. Section 8. Credit score errors. You'd think with all this control, credit scores would be airtight, right? Wrong. Nearly half of the people who check their credit report find a mistake on it, and for about 1 in 4 of them, that mistake is serious, like something that can really hurt their credit score. These errors can make it harder to get approved for things like loans or credit cards, and might even mean paying more in interest, all because of a mistake you didn't make. 1 in 20 people had mistakes so serious they could lose a job, an apartment, or access to credit. Imagine being denied a loan because someone with the same name in your state didn't pay their phone bill. That happened more than once. And fixing these errors? It's like arguing with a wall, except the wall charges you interest. Section 9. Are things changing? There's some movement. Alternative credit scores, like FICO XD and Ultra FICO, try to include rent payments, utility bills, and even your savings account behavior. But guess what? Most landlords and utility companies still don't report that info. So even if you're perfect on your rent, the algorithm doesn't care. 2 major bills, the Protecting Your Credit Score Act and the Comprehensive Credit Act, are floating around Congress trying to reform the system. But as of now, They're still waiting for a Senate vote. Section 10. Play the right game. Here's the basic survival playbook. 1. Never miss a payment, even if it's just the minimum. 2. Don't max out your credit cards. Use less than 30%, ideally even lower. 3. Check your credit reports regularly, for free, at annualcreditreport.com. 4. Dispute errors. Yes, it's annoying, but necessary. 5. Don't close old credit cards unless you have to. Age of accounts matters. And remember, your credit score is not your worth. It's a system score, for a game you didn't invent. Here's the thing that'll blow your mind. The entire credit score system is designed to measure how good you are at being in debt. Think about it. If you pay off all your debts and stop borrowing money, your credit score eventually disappears. The system literally punishes you for achieving financial independence. So instead of obsessing over your credit score, focus on what actually matters: building an emergency fund, paying off high-interest debt, and learning to live below your means. The game is rigged, but the good news is you don't have to play it perfectly to win. Understanding how credit scores work and their limitations is the first step toward making better financial decisions. Your worth isn't measured by 3 digits. It's measured by your ability to take care of yourself and the people you love, regardless of what some computer thinks about your borrowing habits. Section 11. Conclusion. The credit score system was built to predict how likely you are to pay your debts. The better you avoid debt, the less it knows what to do with you. So the irony is, if you pay everything in cash, avoid loans, and never carry credit card balances, your score might disappear. It punishes financial independence. It rewards managed debt. But now that you know how the game works, you can choose how to play. Just remember, your value isn't 3 digits long. It's not about playing their game perfectly. It's about learning the rules and bending them in your favor. Thanks for watching.